Hmm?
Let's call her.
I'm calling. Yes, Hailey. Come here. Yes. Hey, Rahma. Umeingia? Dakika ngapi? Aya, sawa. Ameingia yeye. Wayuni. I'm fine.
Yes. Now we can start, sio?
Yeah, Nana will join later. Tumalize hiyo simu.
Kama atatupata, she's welcome.
Mm.
And of course, I'm recording, so there's no worries on that. But ni ngumu kusikiza recordings than live, sio? When you are discussing, it's much better.
Yeah, true.
Yusuf,
So, yes,
ile ya Saturday ya QM ulirecord?
Eh,
yes, nimerecord.
Naweza pata?
Nitakutumania.
Okay.
Even yesterday's, was it the day before yesterday, we have also recorded. Yeah, Rahma, and also it's in the group. Okay, so financial management. Have you read this subject? Najua wengi wetu hata hatujasoma, sio?
no. Tufanye introduction wenye ulisema tukuwe tunafanya introduction kwanza.
Yes, sasa today I'm starting with the introduction.
Okay.
So when you hear something about finance and management, financial management, what is this finance? You might be overthinking. You might say it's complicated. Someone might say it's about numbers, spreadsheets. If I were a villager, I will say these are for serious people in suits, because normally when, like bankers, those who are in suit, always in suits. When I normally see a banker, naonanga to, Ian, I think you have a lot of money, And yes, we will work with numbers, but I
Sina
want
kakitu
you to
ba.
forget about for a moment and think about this. Yes?
Ana kakitu amesema.
Mnichangie.
Okay.
Baby,
Before we
baby.
changie, let us continue. How many of you have ever saved up something you really wanted? For example, you save for a phone. Or yesterday, was it recently? Let me just say recently. One of us was in a group and they planned for a trip with her friends in Dubai. So the process you went through figuring out how much you need, how you're going to get that money, and whether the purchase is worth in the end, that is what we call financial management. So this financial management, what's the course about? This course, what is it about? I don't know if you have read, but what is it about? When you talk about financial management, what is it about? So let me see my notes. What is it saying here? Or let me open to the floor. What's the course about? There you can see smart money decisions. Is it about smart money decisions? So there are three things which we'll be talking about in this course. Three things. The first thing is investment decisions. Investment decisions. Like when you want to buy a laptop or a new laptop to help you with your studies. So you want to buy a phone, a laptop, a TV. That is an investment decision. Example, Safaricom also decides where to invest in, when to invest in 5G or not. So that's an investment decision. The next one is financing decision. Those are the three main things. So in the next one, the second one, financing decision. When you decide on whether to save, to join a circle, to pay for the laptop through a loan or not, that is a financing decision. So the same way, a company does the same when it decides when to issue new shares or borrow from a bank. And then the last one, you have invested, you have financed your investment. What are you waiting for? Profit, dividends, returns. So the last one, we call it dividend decision. When you get a bonus from your job and have to decide whether to spend it now or save it for a bigger goal, that is your dividend decision. A company does the same when it decides whether to pay for the profits to its owners or invest them to grow even bigger. So when we were talking about now, it is making smart decisions with your money to create more value or value. Our ultimate goal is not just to make profit for 1 year, but to build a business that is strong. So in the questions, that should really be seen. Are you interested in just making profit for 1 year or for the long term? So the aim is what we call wealth maximization. But sometimes this story has some drama. What happens when the people running the company want to spend money on fancy offices, but the owners want bigger profits? What happens when the owners want to gamble with the banks or loan money on a risky venture? What happens? We will explore this in our questions. So we will start with question one. Question one. So this is the question one. Do you have that question? Do you have that question? Let me
Yeah, we
project
have
here.
it.
Let me project. You can see the question. The
Yes.
question reads, let me take this one aside and close. So the question reads, Vision Limited is a renowned multiplex operator in Kenya. Presently, it owns 234 screens in 45 properties at 20 locations in the country. Considering there there is a growing trend. I think that was a Kizungu accountant among the people to spend more of their disposable income on entertainment. 2 years back, the company had decided to add more screens to its existing setup and increase facilities to enhance leisure, food chains, etc. It had then floated an initial public offer of equity shares in order to raise the desired capital. The issue was fully subscribed and paid. Over the year, the sales and profit of the company have increased tremendously. It has been declaring higher dividend and the market price of its shares has increased manifold. In the context of the above case, name and explain, name and explain the different kinds of financial decisions taken by the company, the different kinds of financial decisions taken by the company. I don't know if you have tried the question. If you have tried the question, I don't know. So, should I repeat or I give you time to digest?
Give us a few seconds, we digest.
Yes. Okay, we have read. Ama bado niwapatie more time?
No, we
Okay.
continue.
Let me repeat the question again. Vision Limited is a renowned multiplex operator in Kenya. Presently, it owns 234 screens in 45 properties at 20 locations in the country. Considering the fact that there is a growing trend among the people to spend more of their disposable income on entertainment. 2 years back, the company had decided to add more screens to its existing setup and increase facilities to enhance leisure, food chains, etc. It had then floated an initial public offer of equity shares in order to raise the desired capital. The issue was fully subscribed and paid. Over the years, the sales and profit of the company had increased tremendously. It has been declaring higher dividend and the market price of its shares has increased manifold. In the context of the above case, name and explain the different kinds of financial decisions taken by the company. So I have done solutions and once I read to you, I expect also you add, enhance my points. So the first one, if you look at the question is asking us to identify three main uh, three main things of financial or three kinds of financial decisions. So the first one is what to buy. What to buy decision, that is investment decision. When I was explaining what this what this financial topic is, financial management topic is about, I said it talks about mainly of three things: investment decision, financial decision, and dividend decision. So we will explain the three kinds of financial decision. So the investment decision explains on what to buy. It is the most important decision. It's about choosing which long-term asset or project the company will spend its money on to generate future income. In the case of Vision Limited, the company had decided to add more screens to its existing setup. So if you read, it owns 234 screens in 45. The fact that there is a growing trend, so it decided to increase more screens, to add more screens to this existing setup. Yes?
So,
Yes?
sorry.
Okay. So, and increase facilities to enhance leisure, food chains, etc. And that is in the question, if you read the question. So, if I give an example, imagine you own a small delivery business with one motorbike. The decision to spend 150,000 or 100,000 to buy a second or bigger motorbike is our or your investment decision. So you are investing in an asset today with clear goal of making more money in future. So the first one, I say, it is an investment decision. And when you have this question, you use the context in the question to explain or give an answer. So the main point might be investment decision, but you get the explanation note from the question. So number two is financial decision. You want to invest. Iron is here. So I want to invest somewhere. I want to start a business. What will I do? Either I will approach bank to loan me a SACCO.
Hello, Evan.
Welcome Nana.
I'm so sorry, I was dealing with kitu ya kazini emergency. Poleni sana kwa kuchelewa.
Pole for the emergency.
Okay,
May the
asante.
emergencies become less and less, or may God eliminate those emergencies.
Amen, asante.
Okay.
Asante.
Welcome. While you were away, we had introduced this, is it a subject, a topic, a chapter? This topic, subject and the introduction topic or chapter. And I have talked about the three main things that we cover in this topic. And I said that this topic majorly is nothing difficult, or this subject is nothing difficult, but talks about three things, of which we are discussing in this question. So maybe we give you 1 minute, read the question, then we continue with our explanation. Is that okay, Nana? For the interest
Yes,
of
that's
sisterhood
okay.
and brotherhood? Okay, you can
Shukran,
read. Let me
shukran.
give you more time to read, and I repeat again.
Okay, the image is blurry. I don't know if you can change the settings. I
Yep.
can't see.
Okay.
Let me
The question
let me
is
just look for my
inside.
glasses.
Also, the question is in the class. Maybe sorry, is in our WhatsApp group. I have shared already.
Okay.
Alice, are you able to see?
Yeah, I can see.
Ayan, are you using laptop first to begin with? Are you using laptop or a phone? I highly
I'm
suspect
using my
Nana is using her phone, her small phone.
Nimechukua miwani, miwani kama it's my eyesight. Yeah,
You can
moment,
also
try.
use.
Yes,
You
I
can
can
also
see
download that
perfectly.
Word document.
Yeah.
You can also use that Word
Okay, I
document
can
I
see.
shared in the group.
Okay.
Okay. You can read. Let us give you 1 minute to read, and then you join us.
Yeah, I am reading it out loud.
You give kimoyomoyo. Or also you can read loud for us. You can, so that we remind
Kimoyomoyo
ourselves.
is okay. No, kimoyomoyo is okay. Let me just read haraka haraka.
Haya.
Okay, sawa, nimesoma. Asante.
Poa sana, unaendaje? Nipatie information
Pia kuna
haraka
dakika za
juu
kuiunderstand.
niko class. Can I call you after
Haya.
1 hour? Yeah. Okay, you have read, right?
And I
Yes,
understand.
right. Yeah, indeed.
You are with us. So give us an example of the 3 kinds of financial decisions taken by the company. One example. I am starting with Nana.
Well, really throwing me under the bus. Okay.
Sasa kujira
Financial
makusoma.
decision.
Yes.
Umesema nini?
Name and explain the
Mm,
different kinds of financial decisions taken by the company.
okay. Sijajua financial decision ni gani.
Okay.
Have you
Let
mentioned
let
here? Ama
let
iko kwenye
let me
template?
mention let me mention so that
Okay.
unajua sometimes
Akili
when when
irudi.
when you join somewhere
Yeah, you've been
ni kama you are left behind. It's psychological. Unajua when we were starting unasema tu hao watu waliniacha wamecover a lot of ground. So psychologically, so let me prepare you psychologically. When you are
Okay,
introducing the
sana.
topic, when I was introducing the topic, I said someone might think finance is for the bankers or something very huge. People,
Okay.
something complicated about numbers, spreadsheets, serious people in suits. And then I talked about that a simple trip you plan with your friend or an idea or saving for your phone is a financial management. And then I said this chapter covers mostly 3 things, or this subject covers mostly 3 things. The first one I say is investment. Even wakati unafungua biashara, you are setting up that shop, that business, that kinyozi. So it's an investment decision. When you think about investment decision, what follows next? It is the finances. So the financial decision. Unaweza fungua duka bila mfuko yako kujama bila pesa? No. Either, so the financial decisions can be many form. Borrowing from friend, saving for it. It can have many form. And then finally, you have invested in an investment. You have set up the business. You have financed the business. What is your expectation? To get return,
Profit.
to get profit, to get dividends. So those are the things this subject or topic covers. So now, back to our question. Having known those 3 things, back to our question. Now,
Yusuf,
yes,
I
yes.
think for her to understand better venye umetuelezea ndo waielewe venye in simple terms venye umeeleza. Yusuf amesema like we have 3 major financial decisions. The first one is investment decision, and that one in simple terms is where to allocate the funds that you have. Where to. Unaelewa?
Okay.
That is investment decision. And then financing decision is where to get the money. So umeamua, I am starting a business ya kuuza nguo. That is where you're going to put your money. Unaelewa? Making a investment decision. Then where am I going to get the money? Financing decision. Where to get the money? Third, after you get the money, the profit that you would get, then you dividend. So in simple terms, hivyo ndio alikuwa anasema.
Okay, nimeelewa.
Yeah.
So ni hizo tatu una mention alafu una explain.
Explain now for the case study. Now that is where we were.
Okay, asante. Thank you so much.
I can see Alice already knows what I know. So
no, I was listening to what you were saying.
She's a better student than I am. Thank you. That shows that you are listening. Thank you. Ian, are we on the same page?
Yes, we are.
So, Nana, now having known those three financial decisions, we relate to the question. You have heard vision limited. So you ask yourself, inside this question, what is the investment decision? And Alice has mentioned, I started by saying what to buy. So here, what are they buying? Presently, it owns 234 screens in 45 properties. Considering that the fact there is a growing trend among the people to spend more of their disposable income on entertainment, 2 years back, the company had decided to add. So previously, before, they had lesser than this amount. So it is 2 years back that the company had decided to add more screens. So that is the investment decision, to add more screens to its existing setup and increase facilities to ensure leisure, to enhance leisure, food chain, etc. So you can find there is a financing decision. Sio? Nana
Ndivyo
has just
kabisa.
left.
Sorry. No. Nilikuwa
Yes.
nimeunmute, sorry. Unajua ulisema watu wasiingie darasani wakaweka mics on. So I was
Yes,
being a
yes.
good student. Right.
Sometimes I'm a dictator, so I'm
Sometimes
sorry
you
for
say.
that. Sometimes,
All the
not all
time.
the times. I
Sawa,
prefer
sawa,
to
sawa.
follow rules. So the
It's
next
okay,
one
it's okay.
is the financing decision. Inside this question, I want someone to tell us, maybe uh, uh, our ladies have been participating. I want to hear from Ian, and he's the right person to tell us what is financing decision inside this question because of where he works.
Unanisikia?
Yes.
Tunakusikia.
Okay. Financing decision, I think they floated an initial public offer of equity shares in order to raise the desired capital. So,
Thank you.
yeah, that one.
Continue.
The issue was fully subscribed and paid, so even though raise your pesa through floating those shares for the public to subscribe.
If we were in a physical class, I could have told them clap for you. But then the problem is we are
Sasa,
icons talking to one another.
Why did you disable these reactions?
Oh, did I disable?
Enable ndo tuweze kupiga
It
makofi.
is enable.
Enable.
I haven't.
Also
It is working.
the dictator.
It's saying reactions aren't available, mwana.
Reactions ni kitu ya kupitia watu.
Oh, reactions aren't available. I will enable later.
Wacha tupige makofi bwana.
I was afraid Alice will laugh at me, so
No.
I will enable next time. So the financing decision.
Yusuf,
Yes.
maybe uenable kwanza waniclap alafu udisable.
Tafadhali. Pia nataki iende hiyo.
Ama tumwambie good job Ian.
Kazi
Asante, sijui ndapata ingine lini.
Kazi sana.
We all understand. Wapi Rahma?
Sasa haijaisha, atapata ingine.
Mwambie. Let's continue, Yusuf.
I think my reaction is on, so I don't know why it's not reacting.
Next class.
Okay.
Wachana na technology, Yusuf.
Haya.
Wewe ni
We
Gen
will
Z.
proceed. Let us proceed. So it is my turn to take a criticism. So the financing
Gen Z.
decision. Where is the money? Decision. So this is where is the money. The first one is what to buy. What to buy decision under investment decision. Now, the question is, where is the money? Once you decide what to buy, you need to figure out how to pay for it. The decision about choosing the right mix of owner's equity or borrowed money. So in the case of Vision Limited, for them to pay for new screens or the investment, the company floated an initial public offer, as Ian has stated. So they chose to get the money by bringing in more owners than taking on loans. So that was the financing decision. So sometimes you do a quick calculation. Say if we take a loan with an interest of 15%, our financing will have a fixed cost or an interest element. So will our business be able to cover for such expenses? So you ask yourself such questions. And then you look at from an angle where you say, if I finance this way or if I finance this way, which one is cheaper for me? And I think Vision Limited, so it fit to go the route they went. So lastly, let us go to the last decision. I don't know where Rahma is. Rahma, can you announce yourself and be part of the
Niko.
club? Uko, eh?
Mm.
Okay. Now, the last decision is called the dividend decision. What to do with the profits or what to do with the profit decision. So Rahma, maybe you can explain to us what to do with the profits using Vision Limited.
Mhm. Vision ama dividends?
Dividend decision.
Mm. Dividend dividend policy decision determines how much profit is to be distributed to shareholders was retained in the business.
Okay, let us also clap for Rahma without the reaction.
Good job, Rahma.
Good job. Good job.
Thank you.
Good
Thank
job.
you. Thank you.
Just a minute. Someone is disturbing me. 1 minute, I will be back. tada wax bare mogtada inuu gaabta kaasi ugu soo celinaysa oo kugu soo celinaa dhib ma jiro soma dhib ma jiro soma dhib ma jiro
Which sentence have you read?
safaricom ka
Mhm.
haya haya waa ku soo wacaya Haya. So welcome back. So as Rahma has said, when the business makes profit, the company must decide how much to give back to its owners and how much to keep for future growth. So in the case of Vision Limited, what was their decision? Vision has been declaring higher dividend. If you read the statement over the year, the sales and profit of the company have increased tremendously. It has been declaring higher dividend. So Vision has been declaring higher dividend. This shows they are making a conscious decision to reward their shareholders with a portion of the company tremendous profits. So, same case. If you, for example, you invested in a small business, you have invested and you're getting profit, it's up to you to save that money and keep it aside or reinvest in that business and expand. So same applies to what Vision Limited have done. So maybe to get the maximum points in a such situation, you explain more, you provide more explanation. So today, based on this question 1, have you gotten the introduction of this chapter or topic?
Yes.
Yes.
Kama watu wanataka kumaliza class, yes, that yes is so fast. Anyway, let us go to question part 2 of the question. Do you think the financial management team of the company has been able to achieve its prime objective? Why or why not? Give a reason in support of your answer. Okay, I will start with Alice. Hataki kubaki nyuma, anataka makofi.
Use of sorry, akisikuwa nimesikiza.
In fact, I was seeing where you are sitting. So sometimes I like getting people off guard. You are not attentive.
Sorry. Yes, I was
So,
not.
so let me repeat the question. Do you think
Mhm.
the financial management team of the company has been able to achieve its prime objective? Why or why not? Give a reason in support of your answer.
Okay, my answer is yes, because the primary objective was to increase sales and increase sales na shares ama ni acha niangalia hapo kulikuwa na increase
Continue, you are right.
and declare increase sales and declare higher dividends, and at the end of it that happened, so their main objective was met. I would say that. So my answer is yes, it was met. Am I right? Or am I wrong?
Okay, thank you. So, here my answer is also yes. I is
Okay,
it
well done.
concur
My
in
baby says
concurrence
well
with you,
done.
in agreement? Yes, there's someone speaking.
I'm saying my baby has said well done, and you people have not told me well done.
Oh, okay,
Oh.
okay. She needs a well done. Well done. You have done a
Good
wonderful
girl.
job.
Well done. Okay,
Okay.
thank you.
baby.
Well
I was
done,
even
Alice.
I was even thinking if you copied from a place, but you have done a good job.
Oh, thank
Okay.
you.
The answer Alice has given is yes. I also agree with that answer. And here, the prime objective of financial management is shareholders' wealth maximization. So, most of the companies, what do they target? Higher dividend, higher share price. So that when you resell that company or that part of your share, then you get more money. The case gives us the most important piece of evidence we need. The market price of its shares has increased many folds, right? Ukirudi kwa hiyo question, the market price of its shares has increased manyfold. So, if the aim was shareholder wealth maximization, then you have achieved that. Think of a share price as a company final grade. Hata sisi tunatafuta grades in our school. So, if the share price is the final grade on the report card for the management, then an increasing share price means the company is passing with flying colors. The good subject grades that led to this were the tremendously increased sales and profit and the higher dividend. Even you, will you not invest in a company that has higher market share like Safaricom, that sells more like Safaricom, for example, that pays more dividend or higher dividend? So that eventually increase the market price of its shares. as stated here in this case, to many folds. So let us put an example. If an investor bought a share for shilling 50 when the company did its IPO and the price increased to 250, then the management team has created a 200 of extra wealth per share for that investor on that single share. That is the definition of achieving the prime objective. So up to there, are we together? This is straightforward, 22 marks. Hii subject ni ngumu ama ni rahisi sasa?
How I would love that.
Ni nyepesi kwa sababu tuna discuss. Ukiwa peke yako
Yes.
ndo unaona vitu kwa ground ni different.
Kuna karatasi ingine nimewahi fanya exam, naona tu blue colors, green colors, mpaka mimi nimechanganyikiwa. Sasa, so kama hujafungua hii kitabu, today umefungua. That's a summary of, and the questions that are coming is a repetition of what I will, or what we have already done. So let me
I wanted
explain.
to say, whatever we have said, it has really explained the whole
Whole subject
concept
in financial
of
management.
financial management.
Yes, very correct.
Yeah.
When we talk about wealth maximization, let me give you an example. Among you, maybe someone, you have a car. For example, you have a car. If you don't have, I know you will buy a bigger one. If you have a small one, you will buy a bigger one. If you have, then that's well and good. So, an Uber driver, for example, if you are an Uber driver, for example, the Uber driver akimbize kazi, afanye hivi, leo apepe watu, akimbie kwa mara, gari ianze kudepreciate, but the number of trips that matatu driver or Uber driver is going on is, let us say, many times. In a year, that person might generate a lot of money. But what happens, since the aim or the idea is to maximize his wealth, see, that person is generating a lot of money by going for many trips. Even surface, that person is not doing. That is maximizing wealth. But, and you are generating a lot of profit. But ask yourself, the moment that vehicle breaks down, the moment that vehicle breaks down, will you not need more money to repair? So is that wealth maximization? The next questions will answer that. So let us go to question 2. It's not the next question that is coming, but in our subsequent questions. So let me close this one and go to the next one. I will go to the next one. So this is the next question. Maybe my background is not good. Let me return
It's good.
to
We can
white.
see. We can see.
No. You have good eyes. Let me go back to white. Okay.
Gold colors.
Yes. You like gold colors?
Not for Nana, for me.
Yes. Yes. Let us go back so that we don't destroy others' eyes. So the question 2. In a company, an agency problem may exist between management and shareholders on one hand, and the debt holders, creditors, and lenders on the other hand, because management and shareholders who own and control the company have the incentive to enter into transactions that may transfer wealth from debt holders to shareholders. Hence, the need for agreement by debt holders in lending contracts. Question required. State and explain any 4 actions or transactions by management and shareholders that could be harmful to the interest of debt holders. Source of conflict. 8 marks. State and explain any 4 actions or transactions by management and shareholders that could be harmful to the interest of debt holders. Sources of conflict. Okay, I will give you 1 minute to think about it. Then we proceed and give my answers. Then maybe we debate the answers I will give here because I have read the topic and done research before you join the class. By the way, is my audio clear?
Yeah, iko clear.
Alice, iko clear? Unanisikia vizuri?
Mm.
Okay, thank you. So now, because of time, let us proceed. So the question is asking us to identify 4 specific ways that owners acting through managers can make decisions that benefit themselves but hurt the people who lent the money. The question says, state and explain 4 actions or transactions by management and shareholders that could be harmful, that could hurt the interest of debt holders. So what are these actions? Action number 1. Before I go to the actions, when you look at an owner of a company, what do they love? Owners love risk because they want to get more rewards if things go well. Lenders, what do they hate? Iron. Is it Ian or Iron? Whatever it is, Alice is here to correct me. Lenders hate risk because they want their money back. With what? Interest. They don't get any extra profit if the company hits the jackpot. So those two people, one is heading to the east and the other one is west or north south. One loves risk, the other one loves risk, but might get reward. The other one hates risk. So, and the person who loves risk has taken the money of the person who doesn't love risk. So what are the 4 classic harmful actions? Okay, number 1, let us start with risk. Taking high risk projects. High risk project. That is harmful to the interest of debt holders. After borrowing my money, for example, or the money of the lender, the owners might invest in projects that are much riskier than the lenders were led to believe. For example, we are in the business of selling school textbooks. So we borrow 5 million from KCB Bank or Absa Bank to expand our inventory. The bank agrees because our business is safe. However, once that money comes into our bank or our account, we decide to use it because the bank don't monitor what we do. So we decide to use it to fund a high risk movie production. For example, we say hapa kuna pesa. So we go or a matatu industry. We buy another matatu and take it to. So that's a high risk business. A high risk business. So if the investors or the owners hit the jackpot, well and good. But if that business flops, what happens? The shareholders have effectively shifted the risk of the gamble to the bank, of their gamble to the bank. So that is a harmful action, taking on high risk projects where the investors or the owners are shifting the risk to the lenders. Okay, anyone who wants to add on that point? do you think is the right answer to that question as point one?
Yeah, I think it is.
Okay, thank you. Uh, uh, Sometimes back I was with other people in another place, so someone was doing a presentation for us, and once he says something good, and he requests people to say clap for me. So today is my turn to ask for clap for me also.
Good job, Yusuf. Weka hii button ya reaction,
you.
weka iwe active basi.
Good job.
Okay, let me go to the next point. I don't want to make the class boring, so if I see I throwing some jokes, ignore them. Pick the important points. Increasing dividend payments. This is called cash stripping. So the company can use its available cash to pay a large one-time dividend to the owners. So they have borrowed the money. The management inflates the books, and then what happens? What happens is the shareholders pay themselves dividends. So if we go back to our textbook company, say the company has 10 million in assets and owes the bank 6 million, the bank loan is protected by an asset cushion of 4 million. Now we decide to pay ourselves, the owners, a huge special dividend of 3 million. Hapo sasa ni kujikaranga. So that is my second point. It is harmful if the shareholders of that company have a loan and they pay themselves huge dividend using the money they took as a loan or the money they borrowed. The third point is
Can I ask
which
a
can
question, Yusuf?
yes, please.
I thought dividends are paid from profits. Why
Yes.
would maybe a company go against that and decide to pay dividends?
Dividends are paid from the profit. So what sometimes can happen is if you prepare these financial statements, some of the money may not be received that year, for example. I got a surplus of 150 million. But what has been collected as cash during that year is, say, 10 million. The surplus is 50 million because of accrual aspect in accounting. Or sometimes some managers, they inflate the books. There's what's called creative accounting. What they do is they want the company to look rosy. They want to make the company image look good. So they inflate the books. Sometimes who prepares these financial statements and who signs?
Accountants.
Accountants. And under the control of the top management. So if someone is not ethical, although we are talking about where everything is perfect in a perfect world. In Kenya, you might see if someone gets the difference between the person who is a thief or not is the position. If someone misses an opportunity, that's the time he's not a thief. Otherwise, we could all be thief. So if someone is majority, not every person, if someone is not ethical and is a CEO or a top manager, then what they will do is inflate the books. Once they inflate, then what will happen? The shareholders can easily pay. This is an example, not every time, but what can hurt the lenders. How the lenders can be hurt by the management and the owners of the company by paying themselves higher dividends or more dividends using the cash they receive. Because pesa ikilala hapo, si kila mtu anataka, fisi ni mingi. Yes, I don't know if Alice, do you want to add or Ayan? So that maybe the point comes clearer.
No, I also had the same question as Nana, and you have answered because I didn't understand how the relationship between them paying themselves dividends and debtors.
Yes, it's called cash stripping. Cash stripping.
Okay.
using the available cash to pay for the dividends.
So someone would pay dividends and fail to pay their creditors. Sorry, their
Uh,
debtors.
No, the moment you pay yourself more money, you reduce your cash flow,
Yeah, true.
and eventually it will affect the trading of the business, and that may hit back on the lenders because you have less money to trade, you have less money to do your business, you have not collected enough of your debt, so that might eventually affect the business. So when someone is borrowing money, the aim is not to pay back, but some might have that aim. Just pick the money, get out of the country, go, get away with it. Si watu wengine pia wanafanyanga hivyo. I don't know, maybe Ian works in banks. Ian, unafanyanga kazi because tulikuwa nimekuona huko KCB somewhere there. Haya, utuambie kuna mtu ambaye alitoroka na pesa yako?
Wanatoroka
Yusuf
sana.
ni mpelelezi.
Eh,
Wanatoroka sana bwana.
wanatoroka sana eh?
Mm.
Haya, I'm not among them. Number
I hope
3,
so.
taking on more debt. Taking on more debt. By the way, I will share the solutions, eh? My solutions. Taking on more debt. The company could borrow even more money from other lenders, which means if the company gets into trouble, there are more creditors who need to be paid from the same pool of assets. For example, you get a loan from bank A, and then you go to another bank B to borrow more money. Now the company has more debt to pay. If the assets are attached to, say, as a security, and maybe in the near future the value falls down, what will happen? The lender might lose. The lender might lose because they all share the assets of the company. They all share the assets of the company. So if someone borrows from KCB and another, and same time again after borrowing from KCB borrows from another, I know in Kenya, because in Kenya currently we have this credit referencing, inaitwa jina gani hiyo?
CRB.
CRB. And also there is do you have a way to track if this person has several loans, interbank loan reporting or liability reporting between banks?
Yes, the moment a person takes a loan, the bank or the SACCO, they send kama notification to those credit bureau. So ukitoa hiyo report utaona tu. Though itakuwa inasema tu ina perform vizuri, it is being paid well, hata kama ina red
Yes.
itakuwa hapo,
So
utaiona.
the question now comes, will it be better for you, someone with one loan with only your bank, or someone who has several loans in different banks?
It is better for the person who has not borrowed from many institutions.
So if today I borrow from Aya, I borrow from Nana, I borrow from Alice, will that not hurt, for example, each of you? Because even in fact you will question my character. You will say this person likes borrowing, right? So taking on more debt will harm the lender. Why? When they have a claim on the assets of that person, they might get less. Okay. Any question? Tunataka tuelewane vizuri. Tusonge pamoja kama tunasonga ugali. Hatutaki
Tuko chonjo.
tuko chonjo. So now Nana, vile unasema tuko chonjo na sauti mzuri sahihi. Ile hangover imeisha ya kujoin
Yes,
class late.
officer Yusuf. Yes,
Yes.
officer Yusuf.
Pardon?
Nasema yes, Officer Yusuf.
Yes. Okay. Number 4, asset stripping. So, asset stripping involves selling off the company's most valuable assets and paying the proceeds to shareholders. Okay. I have not seen this. Leaving the lenders with a weaker, less valuable company as a security for the loan. So, tuseme hii company has several buildings, for example, and in a strategic area. So the company sells part of its assets. Na wewe ulikuwa unajua the balance sheet of this company is very heavy. They have many assets, even though they didn't use as a security, but they have many assets. So what the shareholders did is they sold part of their assets, their fixed assets. That will hurt or reduce the lender ability to collect if the company fails to pay the loan. So this is called asset stripping. Okay. So there is an example here. Going back to the textbook example, you had a textbook business, and inside the textbook business, you are given a right from a popular publisher to sell. You are the sole distributor, and you have that right. So what you did is you took the loan and you sold the rights. You sold the rights. That will affect your cash flow. So the investors or the shareholders or the owners wanted to get quick money. So what they did is, let us sell these rights. Hii ndio itatupatia. And they left the company with lesser revenues, with lesser ability to collect less revenues. So that will also harm the interest of the lenders because they sold what we can call the crown jewel of their business, the rights of their business that was generating most money that could have repaid the loan, leaving the bank with, as we can say, in a weaker position. So asset stripping. So I mentioned 4 things. The first one is taking on high risk projects that will hurt the lender. If you take high risk projects, if you take the loan and invest in high risk, that will hurt the investor. If you pay yourself dividends from the money you borrow, high dividends from the money you borrow, that will also affect the lenders. Okay, taking more debts will affect the lender. Eventually it will harm the lender because you have appetite for more loans. That itself will dilute the claim they will have on your assets. And finally, I talked about something to do with asset stripping. Selling off of the company most valuable assets. Okay, I can hear claps. Asanteni.
Nataka kuclap lakini tena nina swali. But sometimes I think high risk businesses also may translate to high returns. Isn't it so?
Yes, I can hear your point, but continue.
So maybe as opposed to being maybe just a purely high risk, but sometimes I feel that invest in kitu iko risky na inarudisha returns, it can actually be good for the For the
Lender.
organization.
Yes.
Yes, for the lender, I mean, sorry.
So think negatively now. What if you have invested in high risk but umeanguka, hiyo biashara imeanguka?
Alafu isirudi.
What
Okay.
will happen to the lender?
So it's a double-edged sword.
Yes.
Okay.
The investor is thinking, don't lose. The lender is thinking, don't lose. While the shareholder is thinking, this money hata ukipoteza ni ya nani? Wewe, can you invest in high risk business with your money? Kwanza unaogopa. Lakini
Yangu
when you get
siwezi,
money
ya
from
wenyewe
Iron,
naweza.
ile ya mtu mwingine
Ya
unaweza.
haya nitachezea kweli kweli.
Let me give you an example. If today I take you to a supermarket, or if I take my wife to a supermarket, you know you will collect everything. Everything in that supermarket.
Hata vile vitu
Only use him as a wife.
hutaki.
Lakini the moment you are paying for yourself, what
Umeulizwa
happens?
swali na Alice kwanza, wacha kukimbiza maneno. Alice
Aya,
ameuliza
Alice?
swali.
Yes.
Kwani you are married?
Amekimbiza hiyo mbio
Ama
mbio.
it's an imaginary wife?
Yes, tell me, umeuliza nini?
Is it
You
an
are?
imaginary
Ameuliza
wife?
swali.
Uliza.
Are you taking an imaginary wife to the supermarket?
No, I'm not taking an imaginary wife, but I know from experience.
Okay.
Yes.
So you are married.
Kama unataka kujua ndio. Uniulize ngapi? Lakini bado nafasi sijajaza.
Usiende hapo, ni hivyo tu, ni wenye unaambia vingi kama dictator.
Alice ashaenda Uluyani, ameenda Uluyani.
Yes, haya.
Hata anajua hivyo.
Ongeza uturepresent bana.
Hakuna.
Bado tatu.
Anaambia vingi kama dictator, huwezi dhani anaweza kuwa ameoa huyu. Atadictate kila mahali.
Ananiambia mimi ni dictator lakini
Nimesema upike ugali.
Acha mimi nibaki na Mluya wangu.
Kuisha. Kaa na Mluya umpikie ugali. Haya. Anyway, so since I have mentioned 4 points and you have 4, I expect each one of you to give me 1. I will start with the person who is ready.
I am ready. The first one. The first
Yes.
one is asset stripping. Selling
That is the last one.
valuable.
Asset stripping.
Yes, I'm saying the one that I'm ready with.
Yes, asset stripping.
Yes.
Next person.
Multi-borrowing, taking more debt.
Yes. Hiyo ndio mimi najua ilikuwa inakuuma.
It's related to him.
Yes. Taking more debt. Inaitwa claim dilution.
You're investing in high risk businesses.
I know, ulitoka tu kwa ofisi sahihi.
Kabisa. Akili bado yuko ofisi.
Yes. Taking high or investing in high risk project. That's called risk shifting. You are shifting the risk to another person. Ile maneno ya supermarket, iwakumbusha hiyo.
Haya, risk shifting, nitakumbuka.
Kujaza hiyo trolley. Sio pesa yako.
Mbona inakuuma kujaza trolley?
Umefanyiwa hivyo mara kadhaa.
Haya, endelea. Rahma, you are automatically the last person.
Dividends here, dividends.
Good. So if I end my class there, I've achieved something.
I have not finished B.
Utakuwa umetunyonga 8 minutes ama?
Hapana. In fact, I am in question 3 out of question 6.
Good job, Yusuf. Good job. Clapping.
I am halfway.
Good
I'm
job,
in
good
question
job.
3. I'm going to question 3.
Hiyo reactions kwa tunatuma emoji kwa class tafadhali, please.
Yes.
Haya. Nitaweka.
Watu kama
Nitaweka.
sisi tunapenda emojis.
Sana.
Haya. So let us go to the next question. Let me close this. By the way, I'm just halfway. This one is not that much clear.
Kwani tumeruka
Maybe
B?
hapana,
Kwani tumejibu B?
ni the way I have it was a scanned copy, so the way I have a screenshot. So maybe next time I will type, I will extract the text. Okay, maybe you can read from your phones.
What? B.
Question 3.
Wait.
Profit.
Sinataka kuangalia nini? Ama ninaona zangu mimi watu. Hapo
You can see.
I
question
can
2.
see. Hapa
It
inaonyesha
is
question
written
1
question
30
1.
marks. Mm.
It's
So
written
question
question 1.
3.
It
Hapa
is
imeandikwa
3.
question
3.
1 30 marks.
Okay, go to the exam paper, August 2023. If you follow that Word document, it is look for a question that starts profit is regarded. So profit is regarded as a yardstick for economic efficiency of any firm. If all firms of the society are working towards maximum profit, the economic resource of society as a whole will have been most efficiently, economically, and profitably used. The profit maximum by one firm, and if targeted by all, will ensure maximum result in efficient allocation of resources, not only from the point of view of the firm, but from the society as such. However, the profit maximization as the objective of financial management fails to deliver the goods in its operational terms. Though the stake of the stakeholders is of prime relevance, yet the interest of other parties, such as lenders, creditors, society, etc., can't be ignored. The financial management has to face a tough task of reconciling the interest of all parties. In view of the above statement, identify and explain some of the various problems with profit maximization as the objective of financial management. 10 marks.
Unataka tujibu ama tunakungoja Yusuf?
Msome kwanza. You can give me an answer if you have an answer. Hii kwanza
Oh.
umeamuka, umeona tu profit na umeamuka. Tell me.
Si kuna hiyo other people's interests are ignored. Sometimes when you're okay, I'll speak from example. Some companies, when they put profit so much, they tend to ignore needs of their resources kama employees, their welfare, kufanya watu wafanye kazi usiku. So I'm thinking maybe that.
Yes. Let us clap for Nana. That's a good point. Very valid.
Good job.
Yusuf, I have another one.
Yes.
I think focus on profit maximization may lead to unethical practices. In, for example, production, maybe you produce a substandard products and you put them to the market to maximize your profits.
Yes. So this question can have several answers. Alice, you are itching to talk.
Go to Rahma first.
Haya. She's a
I'm
lady
still
dictator.
digesting.
LD.
Kwa sababu ni mpole unamweka kama last born.
Rahma is our last one.
I'm still digesting. Alice, you can continue.
You're still digesting the question? Me too.
Yeah.
Okay.
Okay. Me, I'm thinking. Rani has said unethical issues, and see, unethical issues come with okay, not necessarily unethical issues. I would say checking for focusing on profit maximization will lead to not only producing low quality products, but to I don't know how to put it. I don't know. The quality of goods produced will not be good because they're just focused on making money and making money. So they'll be producing or whatever they're doing or the services they're offering will not be top notch. So they will not be bringing in things like to improve the products. They will not be bringing things like branding more, like blah, blah, blah. Kama hizo. I would say that.
Rahma, have you digested? Or you have taken a heavy meal?
My point is the managers will focus on short-term profits over suitable long-term growth.
Okay. So I don't know whom I will clap for. All of you, you deserve claps, not just one clap, eh? You deserve claps. Thank you. So, in view of the above statement, identify and explain some of the various problems with profit maximization as the objective of financial management. So, the central issue here is profit maximization. Even from the shareholder is an inferior goal to them. Why? For the shareholder, remember what's profit maximization? There is some analogy I want to put. Profit maximization for the shareholder is inferior to wealth maximization. There is difference between profit maximization and wealth maximization. Let me give two examples. Do you remember when I was talking about the Uber driver? So there are two drivers here. There are two drivers. One is called profit maximizer and the other one is wealth maximizer. So listen to this. Profit maximizer, his goal is not a lady. His goal is to have the most cash in his pocket at the end of the day. He might achieve this by skipping car maintenance, overloading passengers, and driving recklessly to get more trips. His aim is short-term, high profit. Compare with this one, driver B, wealth maximizer. His goal is to build a valuable long-term business. He services his car, so less accidents and less breakdown, builds a great reputation, drives safely, anapeleka watu safe. His daily profits might be slightly lower due to cost, but the overall value or wealth of his business is much higher and sustainable, both to the society and to himself, right? So if you compare the two and you go back to the question, what was it talking about? Is the problem of profit maximization. You remember? I know most of the points you have provided are well within the answer to the question because this question had wide answers. So some of the answers I have provided through using those driver A and B analogy is when you are when you are maximizing profit, you are ignoring risk. It ignores the risk. This is the most critical flaw. For example, driver A is taking a massive risk by skipping maintenance. His engine could blow up, destroying his entire business. A company focused on maximizing profit might take on dangerous, risky projects that could lead to bankruptcy. Wealth maximization, however, always considers the trade-off. 2. For profit maximization, it ignores the timing of returns. Profit maximization treats a shilling earned today as equal to a shilling earned 5 years from now. But we know this isn't true. Getting more money sooner is always better because you can invest it. Driver A only cares about today's cash. Driver B thinks about the long-term health and earning of his business. So think about profit maximization, wealth maximization. We are thinking the way of financial management. 3. It can be manipulated. It can be manipulated. A manager can boost profits this year by delaying, for example, paying 500,000 equipment repair until next year. What will happen? Yes, you have maximized the profit, but then in future you might incur more expenses. So that in future will reduce your wealth. So profit can be manipulated. Manipulation profit is an accounting number and can easily be manipulated. So 4, this is more of accounting. So when you read the question on profit maximization, what profit are you maximizing? Are you maximizing the profit before tax, profit after tax, profit before dividend, profit after dividend? So profit maximization in itself is an ambiguous word. So those are the 4. Most of the others you have mentioned. Okay. So this one, I know every person will mention several points, even 20 to 30 points, you can mention them. Is that not correct? He is in the open question. But think more of financial management and expand the questions, the answers. Nana, hello? I know it is 9:35. Have you started switching off? We will do the last question. We will do the last question.
Tunaifanya sahi ama next time?
We will do the last. I think these others are more of repetition. Okay, one more question, and then we close. One more question. Just give me 10 minutes, one more question, and then we close for today. So are you able to see that question? That one? Within the context of financial management, discuss the agency conflict and its resolution. Owners and managers, creditors and owners. Owners and managers, creditors and owners. So that is the last question I will end for today. This is called agency conflict. This is called agency conflict. That agency conflict describes the problem that arises when one person, the agent, is supposed to act on the best interest of another person, the principal. So who is the principal? The owners are the principal. Who is the agent? The managers are the agent. Who is the principal between the creditors and the owners? The creditors are the principal because they have given them money. So the conflict between owners and managers. The owners, shareholders are the principals. they hire the managers, including the CEO, to be their agents and run the business. So the problem is that the manager's personal goal might not be the same as the owner's goal of maximizing the company value. You as an employee, what's your intention? To get more salaries. The owner's aim is to get more profit, maximize their wealth. For example, if you own a shop and you live far away and hire a manager to run on your behalf, you, the owner, want to make as much profit as possible. But the manager might want an easy life. So the manager might tell you, I don't want a lot of work. For example, afunge duka mapema. So there is that conflict between you and the manager. So how do you solve such conflicts? Incentives. You provide incentives. So the question was asking the conflict. First, you state the conflict, and then you provide the solution. So what are one of the incentives? I know where you work. If you are given pay per performance or commission on performance, you will work more. Say ukiambiwa every hour you will work, you will get extra 5,000 or 10,000. You will work more. So providing incentives. So the owners can offer the manager bonus based on sales, for example, or commission. Okay. The other one is conflict between creditors and owners. What's the conflict between creditors? The creditors are the principals who have lent money to the company. The owners who control the managers are the agents responsible for using the money wisely. The conflict is about risk. Unachukua pesa kutoka Iron, you invest in a risky place. So lenders want to be paid back safely and on time. Owners, on the other hand, often benefit from taking big risks. Example? Okay. The example we have given, I know we remember, we have given where someone invests in risky projects. What if that project fails? It is difficult or it is a risky, it is harmful to the lenders. So how can then have a resolution between the two, the creditors and the owners? Yes, kidogo. Acha niangalie huyu. Alice, maybe you can continue.
You want me to continue with?
Yes, yes, yes.
Continue
Brother,
with.
una nini? Bado?
Anaongea nani?
Thanks. No, not now. Okay, so I'm finalizing. So for the owners and the creditors, they can come up with loan agreements and restrictive covenants. So those are some of the resolutions. For example, the loan agreement might say that they are not allowed to sell or to venture in certain businesses, which will limit the owner's use of that money. The other resolution is security, collateral. The bank can ask for title deed or as security, so that in case the owners misuse that money, they will pay through their asset, through the sale of their asset. So, and in fact, when you provide that security, you won't play on that money or you won't venture into risky businesses. So, the questions were about 6, but we have covered 4 of them. I have taken most of your time. I'm sorry. for delaying you. Labda wengine nimewakosanisha na wazee. Ian, are you there?
Yes, I'm there.
Rahma, ulituacha ama bado huko?
Niko.
Ama unafikiria vile utajaza hiyo troli? Alice?
I'm good.
Haya. I think we can now say we can stop there.